Thanks a lot for joining us, Akhilesh. Good afternoon. First up, while the top line saw a growth of about 24%, the margins actually came down by close to about 120 odd basis points. That was primarily on account of increased other expenses. So could you tell us what these other expenses were, and are they recurring in nature?
Other expenses are in the nature of market development expenses, and some of the expenses we incurred for the improving our exports market. As in last year's and this year compare, we have moved from our prominent markets and gone to territories like Latin America, Africa, US region. So, in that way, the logistic cost has increased, traveling expenses have also increased. We are majorly focusing on North America and Latin America. That's why these fixed expenditures are increased in terms of logistics. And also, we are also working on TOC, which is mainly working on removing the constraint in terms of inventory and debtors. So somehow these other expenses are increased because of temporarily for 1 or 2 quarters.
Okay, so it's going to be just for another 1 or 2 more quarters. Could you break up your revenue growth of 25% into what was the growth rate in the domestic markets, what was the growth rate in exports, and the visibility that you have?
Yeah, export has grown by 13% on year-on-year basis, and whereas domestic has grown by 32%. Domestic also mainly grown because of our agri industrial and the solar OEM sales. The good thing is that domestic has grown on a core business basis. Solar project is yet not involved into that, which is yet to come in next 2 quarters. In exports market, again, we have majorly grown in the US and Latin America region.
All right, Akhilesh, last time you spoke to us, you indicated that your FY16 top line will grow to around 450 or to 400 to 425 odd crores. In the first half of FY16, your total income has just been 128 crores. So do you keep your guidance intact?
No, actually, after this last quarter, I think we have revised our guideline because of some reasons, like we have to also maintain our working capital cycle with the margins plus sales growth. Considering all three combinations, we also revise our growth rate because we can't keep increasing our working capital days. At this level, we have to manage this thing also. That is why we have revised our growth.
So what do you think it will be at?
We are expecting this year around 10%.
All right. Okay, Akhilesh, we'll leave it at that. Thanks so much for joining in. That's the word from